It's about that time of day again, folks. Welcome back to Nightly Newsletter, boys and girls. Joseph James here, wrapping up the week here, Thursday evening, August 13th, 2015. Welcome back to another jam-packed newsletter. Boy, oh boy, this week of volatility and trading opportunities continue here today. Boy, that euro pulled off the highs. We're going to see if these buyers have the goods coming in tomorrow's session. S&P continues to do well off the wedge. Crude hits all three of our targets on the way down. We talked about that today. And a perfect bull trap off the range highs. And of course, gold continues to be a little bit sluggish here as it pulls off its highs. Boy, we got a great newsletter in store for you guys this evening. But, before we wrap up with our last newsletter of the week, I do want to remind you guys a couple things here. Make sure you're watching this video over on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, there's a link in the description of the video that'll take you over here to the blog. There are a few different reasons why it'll be in your best interest to get over here and watch this video on the blog. First of all the charts that you're going to see me using here this evening, you can download all of those right below the video here today. Also, I've got a free pass for you. If you're not a member here at schooloftrade.com and you'd like to get a free pass, come out and test drive our live trade room as a guest. Grab your free pass in the upper left-hand corner. Also, lower left-hand corner, I've got a nightly newsletter mailing list. All I need is your name and your email address, and I'll shoot you an email between about 7:30 and 8 o'clock Eastern Time, Monday through Thursday evening. Now you never have to worry about missing out on another newsletter. Also, on the right-hand side, we have a link here to join our free trial membership over at schooloftrade.com. And also, I've got someone standing by 24/7, 365 to answer any of your questions. So, use and abuse the blog here at Sideways Markets, and make sure you download those charts so you have them ready for your trading session tomorrow. Don't forget, I'll be opening up my live trade room tomorrow morning for all the members here at School of Trade at 8 a.m. Eastern Time. I look forward to trading right along with you. Shall we begin with the black gold, the Texas Tea, the crude oil futures? Got a few more days here, one more week left on the 9/15 contract. We've seen a little bit of volume move to the 10/15 contract already, but that's pretty natural since the market's dropped so significantly. What's happening is you're seeing hedgers go out 1 month earlier to protect against falling prices, right? If you consume crude oil as a business owner, you love these lower prices. But if you produce crude oil, though, something tells me you're selling crude futures to hedge against that into the 10, 11, and 12 contracts right now. You know, if you're smart. Now, a lot of stuff to go over on the crude chart. I wanted to make sure we started with this today. Talk about a picture perfect scenario. Exact words from last night. Bearish trend, trading range. Remember, we're inside this range yesterday. My exact words were, look for bull traps. That little bull trap right there, that's all you needed there. Poking its head out and then right back on down, right? Take some profit at the low of that range. And I gave you guys a nice juicy target down here at, it was what? 42, we had the range expansion at 42.10, 42 even, 41.93. No, you really couldn't mess this thing up today if you stayed focused to the downside. So incredible session for all the crude traders out there, but I don't know. If you're a seller right now on crude, I definitely recommend taking the majority of your profit off the table right now. And I got to tell you, you might want to grab the beach chair, the sunblock, and a water bottle and a hat for tomorrow, because tomorrow might be a beach day if you're a bear on crude. We got a summertime Friday coming in. Big move down, and as you can see here, we're well oversold right now in this bearish market. Remember, going back to last night's newsletter, my exact words were last night that this would probably be where you get your best buying opportunity, down around that 42. It may push a little bit lower here, but it's very low probability. Remember, we think in probabilities as professional traders. It might go lower, but if I sell the lows like this every time, I'm going to lose money in the long run, right? I'm not here to just get lucky. I want to be able to replicate my success. Oh, and also avoid the lack of success, right? That's the benefit of having a strategy, a proven strategy at that. So we know we have a lot of support levels down here. We get a range expansion support at 42.14, a measured move support level, A, B, C, D, measured move, we also have another measured move waiting for us down bottom here, which really, if we did just take off again tomorrow, and who knows, it is summertime Friday. We are still seeing reaction, talk about the Fed raising rates, et cetera, et cetera. If we do push lower tomorrow, right, which is a little bit unlikely at this point, but heck, this is crude we're talking about, right? It wouldn't be the first or the last time it surprised us here. So this measured move down at, say, 41.20, 41.10, I'm looking at this as a bear flag right now. Got a strong push down. You know, whenever you see these flags, right, here's a spike in channel. Strong push down, right? There's your channel, there's your deep correction, and there's your A, B, C, D down, right? We talked about that last week. Well, last week? No, earlier this week. That's where we got these targets down here already. And then, of course, I'm looking at this as a bear flag, right? Spike down, and then what appears to be this lazy, it's actually a trading range, but you could also say it's a bear flag, and we know that A, B, C, D is the way you want to trade that bear flag, selling at the top of the flag, right? Selling the top of the flag there, which is, of course, exactly what happened today. So, again, everything really playing out here. The bears are completely in control, but I would imagine, though, heading into the weekend here, we're going to see some profit taking from the bears. We're oversold. You know you're going to get some gamblers on crude right now saying it can't keep going lower forever, right? I should buy it now, even though it can keep going lower. But you know there's going to be some of that tomorrow. And, of course, I've got a low of a channel here. I got a lot of support levels waiting for us here right now. So, again, it may push down a little bit lower here. Remember, they're just waking up in Asia, right? They haven't responded to this information yet. So we definitely may see one more leg down. But I'll tell you right now, those sellers, you guys are really going to have to stay patient right now, because the best opportunities to be a seller is going to be right up around this 43 area, because what I expect to see happen is I expect to see price migrate back towards this channel, this trading range low. And this trading range low is really going to be, in my opinion, I mean, obviously, again, it can do whatever it wants tomorrow, but under normal conditions, it is a summertime Friday. There is a lot going on right now. We may get another push down and then a break back up. I can't sell right here. So the only option I have right now to be a seller is to wait for the profit taking to take hold, to wait for the buyers go buy in at a bargain, right, and get this price back up off these lows here. Then I'll look to get selling again, right? It's the same thing we always do on this newsletter. We don't sell lows, we don't buy highs, and we're at the lows right now. So really the only option right now is to be a buyer. I'm going to get to you bulls in just a moment, though. If you're a seller right now, what you really want to wait for here is, this is where the highest probability trade is going to be. You're going to wait for price to go back up and try to finagle its way into that range, because that's going to want to happen. It's going to want to go back into this range, because remember, I don't need no volume profiling to tell this. Where do you think the most amount of volume is in this chart? For all you volume analyzing traders out there with complicated tools. No, look at the flat market. That's where the most amount of volume is going to be, right? If there was a volume indicator on the right-hand side, you would see all the volume piled up, probably right around that 43 to 43.25 area, 43 and a quarter area, right? That's where it's going to try to retrace to, okay? So we definitely expect to see tomorrow a price moving back towards that range. Okay, buyers, hold on. I'm going to talk about that in a second. Assuming these buyers cannot get this thing back inside that range, okay, buyers, that's where you're going to be looking for also as well. That's going to be your next shot to sell into those buyer stops. Make sense? Okay, if we do happen, because, and this again, this may happen tomorrow, where we literally jump right in, pull back, buyers will take hold, and this will jump right back up. This is crude we're talking about. 42 to 44 is an easy move. That's a hiccup in the eyes of crude oil, right? Remember, this is crude we're talking about. So, but at that point, then again, buyer failure and sell it back down. So, guys, this is as simple as it can be. If you're going to be a seller, sell at resistance and look for buyer failure at resistance. See, when you break down to all just the simplest form, I'm in a bearish trend. What am I doing? Selling at resistance. How? Reversal patterns, buyer failure patterns, or just wait for the price to make the turn and sell it right back down. Okay? as we open up here. Look what just happened. 6 o'clock Eastern time comes around, bam. Well, now I can change my tune. As you can see, this chart just opened 6 minutes, never a dull moment in the nightly newsletter, 6 p.m. Eastern time, right? And here we go. We just pushed down. I couldn't have planned this any better, right? Good timing here, sellers. So price pushes all the way down, almost to give it that little, right, to finish its move off here. Now we really have to be careful. Now we've broken below the measured move, and now once again, you're going to wait for the same thing. So sellers, do we have an agreement here? Be careful selling short here. Again, we broke through one range expansion, and now here we have at that second range expansion on the way down, right? Bear flag, measured move target. I've already said this. Now, what if you want to be a buyer? I better hurry up before the buyers take this thing right back up. You're looking for seller failure. Seller failure at these lows, back up to these highs. Up to these highs, seller failure at the highs, buying back in. Seller failure, buying back in. That's your job right now if you're a bull. Remember, one last thing for you bulls out there right now is that you are in a bearish market, which means tight first target, small stop, move that stop up to point of entry as soon as you get that first target, and then try to get as much out of it on the way back up here. I haven't had that happen before on the nightly newsletter where it says, oh really, I'll show you what we're going to do here, and take off the downside. Again, sellers, be patient. Wait for this price to come up off these lows. Wait for the buyers to try and fail and sell into those buyer failures. And again, I'd be looking for that 43, right, as going to be the next highest probability area for the sellers to take hold. Let's see what else we got going on here. Now that we got the plan for crude. Oh, and don't forget, I'm going to be trading crude tomorrow in real time with you guys in our trade room. So come out and join me. That way we can do this together, right? Remember, crude, sellers, stay patient. Buyers, wait for seller failures at these lows. How about that euro? Euro coming off the highs of the range, and the buyers are looking pretty tough and mighty here right now. Those buyers are starting to flex those bullish muscles here. They're trying to hold this price after the pullback, which means if they fail, we're going to see the sellers jump all over this and take it back towards the lows of the range. Remember we talked about this last night. How do we know when a bearish market, I still can't get over that crude price, that was a riot. How do we know when a bearish market turns into a bullish market, right? Yesterday we saw a couple markets make big jumps higher here. When does it become a bullish market? If it can hold the pullback, So once we get new highs here, okay, bulls, now you've got my attention. Right now, on the euro right now, though, we've pulled back, trying to push higher, and I'm definitely going to be looking for an A, B, C, D target on the way back down, as well as the high of that prior channel. Okay, keep an eye on that. So, euro coming off the highs of the range. Here's that buyers trying to hold it. I'm looking to sell inside this resistance area here. I'll be looking for reversal pattern, buyer failure pattern, or I'll wait for it to make the move and then take it back down. Just make sure you're aware, though, I can't tell you exactly where it will be ahead of time tomorrow because it's probably going to push a little bit higher here before it goes lower. But definitely keep an eye out for a measured move support area, and it should most likely line up with the high of this, right, bear channel, which kind of runs right about, give or take a little bit above that big round number at 1,000. So we're still bearish, but we are close. We are very, very close here to being a bullish market. I've got to hold this. I got to hold this pullback, and really, ultimately, I'm not going to be bullish here on this euro until we can break and hold above that 12.15 area overhead. Right now, though, I've got a resistance area waiting for me overhead, along with the high of that bull channel. Right, albeit very short-term bull channel, the high of that bull channel. I'm looking for a buyer failure to sell this high. I'm looking for a reversal pattern to sell this high. I'm looking for the price to make the move and then sell those rips on the way back down. And again, A, B, C, D going lower. If it does go lower here, if it does go higher here, you've got some extensions waiting for you above. Those will be great targets for you guys tomorrow. I wanted to make sure we gave you every piece of the puzzle here. If price goes higher, we know it has to get above 12.15 and stay above 12.15, right, to be considered a bullish market. We also know if it does continue higher here, we've got targets waiting for you projected above. Also, if it does go lower, expect to see that A, B, C, D on the way back down. And then as we go lower, sellers are looking for buyer failure at all of these support areas on the way down. We got that final target right around this low of that bull channel right now. You know the plan for the euro, right? Don't forget, we'll be trading this one tomorrow morning in real time. Come out and see us, and we'll do it together. Let's keep going. Now we go over to the S&P. S&P is a little bit of a slippery one here right now. A little bit more analysis needed on this one. We've got a short-term trading range, and look closely, boys and girls. There is a bullish tone to that short-term trading range, and you can see they've already got the bear trap on it, right? So there's already been a bear trap on it, but look closely, and they weren't able to retest that high. That's a really bearish clue coming out of this bullish move back higher. S&P is pretty much neutral right now, coming off the highs of the price wedge, which means the target is back to the lows. Remember, we're going to rotate, right? Rotation, grasshopper, rotation. We're going to rotate from low to high, high to low, right? Rotation. Well, right now, we're coming off that high, and we're gunning for that low, right? That's going to be the magnet to bring that price, right? To bring that price back down to that low. The problem, though, which I just mentioned, was we have this bullish move into a trading range, and so we know there is a bullish bias to it, right? That means buyers will buy that low. We teach all this stuff to our students here at School of Trade, by the way. That's a bear trap at the low. Now, what should have happened is we should have pushed back to those highs and held above those highs, right? That would have confirmed the bullishness. This just goes to show you that the bulls tried, but as of right now, and this may change in the overnight session, but as of right now, you can see they were unsuccessful at retesting those highs again. If they're trying to prove us to be a bull market right now, that ain't helping, right? So that's definitely, the bears are seeing that. Other bulls are seeing that right now as a sign of failure. So what are we expecting right now? Well, S&P, I'm still looking to sell at any opportunity. That means if price goes higher, I'm looking for buyer failure to sell off those highs. As price goes lower, got to make sure we don't sell into that support level at that range low. Looking for buyer failure, buyer failure, buyer failure. And then what I would really be watching closely tomorrow is this 2060 area. This is that range expansion support level. It's most likely going to find its way, if it doesn't just rip our heads off going higher here, it's most likely to find its way back down to these range lows. This is the S&P we're talking about. It usually doesn't make those big dramatic moves like crude or gold or Russell, right? It usually will be a little more range bound, especially on a Friday, summertime Friday. But again, we got a lot going on right now. So we may get the pull push all the way back down to those lows. But again, you got to be taking some profit off if you're short at that 2060 area, because what's very likely is to get this thing to try to make the move, bounce, and then sit somewhere in the middle of this range, right? The bigger range, right in the middle of that price wedge as we go into the weekend. Okay, selling off these highs, I'm looking for selling opportunities at buyer failure areas, right? Support levels on the way coming off these highs. And again, if it pushes higher right now, I'm still looking for opportunities to sell those highs until what? Until we push higher, pull back, and hold the pullback. That's when I'll start considering this to be anything besides a consolidating range-bound market. All right, let's keep moving here. Finishing up the session here this evening and finishing up the week here with the gold. We've got gold coming off the recent highs in a bearish market. I know it's been rising in the past few days, but this is a bearish market, which means sellers are waiting for buyers to fail at support levels as prices move back towards the lows of the range. This is very similar to what we just saw on the euro, right? Here's the euro. It's almost the identical chart, right? Okay. So here we go. We got euro here and gold, very similar. Long-term bearish trend, no doubt about that. Okay, that's the easy part. Short-term bullish channel. We get an overshoot of that high of the channel, barely missed the measured move. Now, here's what happens, guys. When markets go that close to those measured moves and they fail like that, usually they respond, right, with vigilance, with what's what we're looking for, right, with extreme strength in the opposite direction, right? Those near misses, for example, crude oil is notorious for doing that to us. If it misses by 1 or 2 ticks, right, assuming you do the level correctly, it'll react by pummeling the opposite side of it. It's pretty consistent in that sense. So gold coming off the recent highs, same strategy we've had all week on gold. Every time it goes up, I'm looking for buyer failure, buyer failure, buyer failure, buyer failure to sell at support. If price goes higher here, I'm looking for selling opportunities at those resistance areas. Now, in my opinion, we are in that pullback. The only time, just like we saw on the euro, the only point at which this now becomes a bullish market, in my opinion, is when we break back up to 25.5 and stay above it. That's the only time we're going to call this a bullish market. So right now, buyers may come in, but again, I'll be looking for them to fail for selling opportunities coming off these highs right now. And then, just like the euro, the high of that bear channel, that becomes your target now, and just like the euro, there's a big round number waiting for it. So if you're a seller right now, option number 1 is to sell at resistance areas overhead. Option number 2 for the sellers is to wait for buyer failure at these support levels. Buyer failure on the way down. What if you're a buyer right now? Well, if you're a buyer right now, you got to remember you're in a bearish trend, which means treat it as a scalp until proven otherwise. If you want to be a buyer, I would definitely wait for the sellers to try twice, wait patiently for these sellers to fail, then buy right into those stop losses and take it back to those highs. We're going to cover both directions here on this newsletter, as you guys know, right? I want you to be prepared for anything because remember, I can't predict tomorrow. All I can do is identify where the highest probability trades are going to be, manage my risk properly, and follow my plan. Never letting emotions trade for me. And don't forget, this is a bearish market until what? Until it holds a pullback and revisits those highs. Now, wrapping things up here on gold, gold and euro are very, very similar, right? Buyer failures for selling opportunities, and of course, buying opportunities. You're going to want to wait here for those sellers to try and fail. Now, if what I'm talking about is speaking Greek, I wonder if that saying will lose its luster after this whole bailout process goes. Probably not. Bottom line is, if you don't understand what I'm talking about today, if you need help with all this stuff, if you're struggling to make money every day consistently in your trading, guys, that's what we do here at School of Trade. We help new traders launch a career in the financial markets. We're not here to gamble. We're not here as a hobby, right? We have a lot of fun every day. We work very hard to make sure, though, that you do this the right way. Now, a lot of traders on the planet out there these days. I really appreciate you being here with me. Thanks for joining me in the newsletter. Before we wrap up this week, I do want to remind you we get a great free trial here at School of Trade. We've got 3 levels of membership. If you're a brand new trader, you're going to love our beginner's course. If you're an experienced trader and all you're looking for, I was talking to our members today about this, being successful in anything in life is just like opening up a combination lock. You might know the numbers for the combination, but you got to put them in the right sequence, right? It's not enough to know what a stop loss is and a trend line is. And I have people tell me this all the time. Joe, I already know about day trading, but I'm not making money yet. Well, that's exactly what our advanced course is for, right? It's all the strategies we use, access to our chat room and our trade room so that you can go out there and start making the money that you've always been working hard for. Trust me, it took me almost 4 years for me personally to figure out why I was making the mistakes I was making and to put together a proven strategy that I use today and teach to my students. If you're a brand new trader, if you're an experienced trader, guys, I look forward to having the opportunity and the privilege of helping you guys do it the right way. My name is Joseph. Share this with a friend. Give me some feedback. My email address is jj@schooltrade. And that wraps up a fantastic week on our nightly newsletter. Don't forget, next newsletter next Monday evening. But you don't have to wait that long. I'll be opening up my trade room tomorrow morning at 8 a.m. Eastern time with all of our students. My name is Joseph. Be well out there. Be nice to each other. And be here tomorrow with me in the trade room. I'm out of here for now, guys.